Hello, everyone, and welcome to today's episode. Today, I wanted to do a little lesson about impatience. I don't normally trade on Fridays. I'm usually busy on Fridays and not at my desk. However, this morning, I was, and I decided to get in a trade, and then I left for a little while, and I came back, and I got in another trade. Both trades, both trades made money, but could have been a lot better. Um, Part of the reason is because my success on Fridays hasn't been very good because I play the current day's expiration and they move pretty quickly. And if you get in a little bit too early and it'll drop fast. And I have tight stops, so it doesn't. If I don't time it just right, I usually stop out. So I'm trying to get a little bit better at trading on Fridays. So what I did today, I'll show you this is my real account. Um, Tesla was a throwaway trade. It was an all or nothing trade. I only paid $35 for it yesterday, and I was going to hold it overnight, looking for a big pop today. I figured I was either going to lose 35 bucks or make however much. Um, so just disregard this. It's going to expire worthless, which is okay by me. Not okay by me, but that's kind of what I expected. That's why I played it the way I did. So I got in Apple this morning. At 9:33, I bought Apple puts. I just thought the market was a little bit top heavy. I kind of thought we'd see some pullback. So 9:33, I bought. We're on a 15-minute chart. We got to change that. I don't trade from this computer. This isn't my trading computer, so my charts aren't set up 100% exact. So let's go. Okay, 9:33. Right here, I bought puts. We had a pop here, came back down, and I kind of thought from here we'd drop, and we did. However, I didn't hold them long enough. I sold them at 9, or actually I added to it at 9:43 and sold at 9:55. So I added at 9:43, which was right after the open of this candle. We had a bearish engulfing here. It's not a strong bearish engulfing, but it's a bearish engulfing that closed below the cloud, which was a few support levels. Also today's open. So I added right here, thinking we would drop right here. I thought with this candle, I thought we would get a big drop right away. Didn't drop right away. It kind of held there for a little bit. I sold at 9:55 and 9:56, which was right after the open of this candle. So I sold during this candle, and part of the reason is because of the pivot point here. I sold at this candle, and look what happened here. If I would have held out just a little bit longer, I paid 43.5 cents. I sold for, my average was 47 cents. So I made about 9%, 8 to 9%. However, these, let me pull up my screen on my other computer. I believe these went to, I think it was $2 or $1.50 or something. Actually, I don't even have them up. I'll pull them up on here. 257.50 puts. So let's take a look. Apple. Today's expiration. 257.50 puts. I don't know why Thinkorswim does this. Sometimes you have to do this. You have to go through this twice to get it to work. And now that time it worked. So let's go back to 3 minutes. Actually, they went to 315. I paid $1.44. I sold at 9.56. At 1.45, they were at 3.15. Actually, that's not right either, because that's calls. Alright, I clicked on the wrong one. Let's go back over here and let's do that. Let's try this a third time. So I didn't think they went that high. Okay, here's the puts. 257.50 puts. They went to $1.17. I paid 43.5 cents, 43 and 44. They went up to $1.17. That's probably about 120%, 130% maybe. Let's see, 117 minus 44 divided by 44. 165%. So I could have made 165% on this. If I would have waited, I sold at 9.56. Pretty much right during this candle here. Let's go to the 1 minute. So 9.56, I sold right here, 43 to 44. If I had waited 3 more minutes, they were opened at 49. That candle closed at 82. Either way, if I'd been just a little bit more patient here and waited, the only reason I got out was this pivot point. And when I sold the first contract right here, as soon as I sold it, it started to pop back up, and I didn't want to take a loss on the trade, so I hurried up and bailed on the second one for basically break even. So a little bit of impatience there cost me 100 and some percent. Not that I would have held it for the full 165%, but you get the point. Traded Boeing just a little while ago. So let's take a look at Boeing. I bought puts at 153. And here's what I was looking at. Boeing kind of fell all day. It kept making lower highs pretty much all day long. We came here, it started to come back down, and I thought, okay, we're going to get a drop. And we did. I just didn't wait long enough. So let's take a look. I bought them at 153, which was right about here, right towards the end of this candle. And the reason I bought them here was because, actually right here, the reason I bought them here is because we were going to close below the cloud, the support level, and that's what usually when you see a pretty quick drop. Not a quick drop, but that's when you start to see it come down. So I bought it right here. I only bought one contract because I bought in the money contract. Because it's so late on a Friday, I didn't want to buy anything out of the money. So I bought in the money contract right here. They were the 355 puts, and you see it was trading at about 353, 354. So it was in the money. I waited. It came down here. I paid $1.47. They actually went to, I think, $1.57 at this point. Rode it out a little bit longer, and then as soon as we started to get this drop, that's when I got out. I only had one contract. Otherwise, I would have sold one and held the other one a little bit longer, or held whatever, sold half, whatever it was. I sold at 218. So basically right at the open of this candle, actually 218 and 47. So it was right after this candle started I sold, and I kind of screwed up. I had my active trader up over here, and I'll show you how active trader looks. Let's get rid of time and sales here. Okay, active trader, there was such a big spread that the ask was way down here and the bid was way up here. Because it was so late in the day, I was kind of anxious to get out of it because I knew time decay was going to kick in. I didn't know, if it happened to bounce right there, I was probably going to take a loss. So I was kind of trigger happy to get out of it. And what happened was, an active trader was such a big spread. The bid was way down here, the ask was way up here, and actually the ask was completely off of my screen. What I did was went way up here and I hit ask, I hit sell right here. However, the bid or the ask was actually all the way up here. I hit the ask at 172, which is what I sold at, and the ask was actually 192, I believe. So I was in the middle of it. I was kind of right in the middle of that spread, but I could have got a lot more if I had realized, the big spread's what kind of caught me off guard. So I had the 355 puts. Let's take a look at those. They're right here. All right, 1 minute chart, 355 puts. I don't know why these are on here. Let's get these off of here. I don't have any moving averages on my, I don't have anything on my options chart. And I really don't even use my options chart. However, it's here because I need it here to see all this. So I sold it at 218, almost 219, which was right here, right pretty much the close of this candle. $1.72. You see the high of this candle was actually $1.72. The very next trade it went through was at $2.01, and it went all the way up here to $2.41. I paid 147, so 241 minus 147 divided by 147, 63%. So potential 63% winner there. I got 172 minus 147 divided by 147. I got 17%. 17% is a great number. It would have been better if I had more than one contract. I actually should have been able to get out of that at 190 if I hadn't been so trigger happy. 190 minus 147. Could have got out with 29%. But it's just basically to show you impatience. I was pretty confident we were going to get a drop here because, like I said, it had made lower highs all day. It had made higher lows here, but it made lower highs also. And because it's a Friday and the market closed Monday, well, I don't even know if the market is closed Monday, but I know Monday's a federal holiday. But I just kind of thought that we were going to get a pullback, get a sell-off at the end of the day, along with this coming down and closing below here. I thought, okay, we're going to get this big drop, and we did. And here's my pivot point that I usually target. Had I had multiple contracts, I probably would have sold one right here where I did and held the other one. And this would have been a point I would have looked at to sell because of this previous low. I probably would have sold one or some of them here and maybe kept one to look for this target. Once I would have sold here, I would have put my stop at break even. I wouldn't have, actually probably would have had a break even right here after I sold this first one. But it's just what impatience does for you. Sometimes it's good to be, sometimes that impatience will work in your favor, but two cases today where it didn't work in my favor, and that is probably largely due to my lack of success on Fridays. I wasn't confident to trade today, which is why I only bought 1 and 2 contracts, why I went in for such little amounts. But in the end, I made money on both trades. It wasn't much. I made $7 on Apple. I made $25 on Boeing. Down 31 overall, or actually $31 today on Tesla. My net for the day is plus 50 cents minus my fees, so I'm probably down about $3, $3 today overall, which isn't bad for, today was kind of I don't want to call it a practice day, But like I said, with my Fridays, I don't trade hardly ever on Fridays, and with my success on Fridays when I do trade, not very good. I'm happy to basically just be out fees today. Um, and everything that I traded today worked the way that I thought it would. I just didn't ride it out long enough for it to get the maximum benefit from it, or even nice benefit from it. I mean, I could have easily been up. This went to, what did we say, $1.17. I could have made $60 per contract, $120 on Apple, and I had one contract here that went to, what was it, 241. I could have made another 90 there. I could have been up, what, 100, what is that, 43 up to, what did I say, 117, 120 there, plus about 80 here. I could have been up $200 on these two trades today with very, very minimal input. I put $87 into this trade and $147 into that trade. 87 plus that 147, put $234 in, and had the potential to make 200 back. I could have made about 80% profit today on my input. But just a lesson on patience, and like I said, on Fridays when you play current day expiration, they move so fast that it just makes it can be scary because they can go against you just as fast, actually faster. And you have time decay that you have to worry about. You have to worry about theta. If you buy current day's expiration, and that's one of the reasons why I got out of Apple. If you look back here at Apple, I don't know if it'll still show up here. No, it won't. If you look at Apple, the theta was actually hurting me, and that's one of the reasons why I wanted to get out of it when I did. What did I trade? 257.50 puts. So let's go back to here again. In this range, in this time frame, let's go back to the 3 minute to make it easier. You see this kind of flat here, but it actually went down to 31 cents with hardly any move. There was hardly any movement in the stock price. See here, there's hardly any movement in the stock price, and it dropped to 31 cents from my 43 entry. So it dropped 20 some percent, and a lot of that was just from theta, just from time decay. And when it did get this pop here, it only went to like 50 cents. Actually, it was only up to like 46 cents. I was barely even after these little pops here. The highest it went was right here at 45. At 9.42, it went to 45 cents. I'm not clicking very good today. 9.42, which was right here on this candle. Even with this, it dropped to here. It only went to 45 cents, which was still break even for me. Now look how much lower, not that it's a lot, but it was lower than it was at any other point during the day. That was a low of the day, and I was still even. So time decay was starting to really come into play, and that's another reason why I bailed when I did. I just didn't. I was afraid that if I held it too much longer, then I was gonna have to. It was gonna have to drop $1 for me to break even. So anyway, that's it for today. I didn't want to make this too long, but lesson on patience. So talk to you later. I don't think I'll be trading Monday if the market's even open. I doubt if I'll trade because I don't like trading on lower volume days. And Monday being a holiday, probably be lighter volume. All right, thanks. Bye.